The US dollar, USD, and the euro, EUR, are generally considered the two most popular and influential currencies in the world economy. These two currencies are widely used in international trade, financial transactions, and central bank reserve assets. The history of the dollar dates back to the 18th century, when paper money began to appear in the United States. In 1785, Congress decided to create a national monetary system, establishing the dollar as the unit of currency. Later, in 1792, the Coinage Act was established, setting the standard value of the dollar in gold. As for the euro, its history began much later. In 1999, an electronic form of the euro was created for non-cash payments. Then in 2002, the euro became the official currency in 12 countries of the European Union, replacing national currencies. Both currencies play an important role in the global economy and finance, having a significant impact on international trade and financial transactions. The choice between the euro and the dollar often depends on specific circumstances and context. Both currencies have their advantages and disadvantages. For example, the US dollar is the world's key reserve currency, which gives it stability and widespread use in international trade. On the other hand, the euro is also an important global currency and represents a large economic bloc of European Union countries. The choice between the two may depend on which market or country your financial transactions are more related to. Inflation is a steady increase in the price level of goods and services in an economy. When inflation occurs, each unit of currency loses some of its purchasing power over time. Inflation can be caused by a variety of factors, including an increase in the money supply, an increase in demand for goods and services, and a decrease in the supply of these goods and services in the market. A certain level of inflation is considered normal for an economy, but levels that are too high or too low can have negative consequences for consumers, businesses, and the economy as a whole. It is difficult to avoid inflation completely, as it is a natural process in the economy. However, to minimize the impact of inflation on your savings, there are several options you can consider. Some investors prefer to hold savings in assets that have historically demonstrated the ability to retain value against inflation. These can be financial instruments, indexes, or investments that generate above-inflation returns, such as stocks, bonds, or real estate. Also, some currencies, US dollar or euro, have more stable exchange rates compared to others. Currencies associated with economies with low inflation or stable fiscal policies may be preferred for savings. It is important to remember that investing always involves risk, and choosing a currency to save in should be based on your investment portfolio, financial goals, and the level of risk you are willing to accept. If you are interested in the topic of investing, I suggest you watch my past video.